The bigger picture is that in Japan we have a very severe labor shortage. Whatever Bank of Japan does, they could raise the rates, they could lower rates, it doesn't make any difference at all. That we have a very severe labor shortage, and particularly in the service sector, which has been booming because of the weaker yen and the inbound boom of tourism that's been going on in Japan. And so wages are going up. Whether the small, medium-sized firms want to pay right now or can pay or they can't pay, wages will be going up in Japan for the next foreseeable future. This is what we've been saying. It's structural. It has nothing to do with monetary policy of Bank of Japan. So, yeah.
Isn't that problem to that effect, the productivity impact that you get for the small and medium firms then? Because what they're doing, and we know this, we've spoken about this as well before, is that they're saying to their workers, okay, we can't pay you more, but work less hours.
It could be. I mean, we'll wait and see. But I mean, there are very kind of encouraging signs that, the wages are going up, at least among the larger companies, which have been leading the market upwards, by the way. And so, I mean, people looking at Japan saying, oh, everything is recovering. It's actually, no, it's Nikkei 225 stocks that are doing the recovery mostly, which is also something that we've been talking about, saying, there's a lot of talk about how Japan is kind of shifting and corporate kind of management is changing, and they go and buy the same old names they've been buying for the last 20 years, which is the blue chips. Yeah. So what we've been saying is actually, there is a change going on in Japan among the low PBR names, value names, and those are the ones that we're interested in, not the ones where their earnings have been flattered by the weaker yen, and we think the yen is very, very undervalued over the medium term.
So when would that equation change for the yen? When will the yen start to strengthen? I think
it's already. I think we already saw that a little bit last year, October, November, December, when there was a lot of anticipation of the Fed pivoting earlier than a lot of people are now realizing. I think interest rate differentials between Japan and the US are going to narrow now, and we know that. I mean, if they don't pivot now in the US, they will pivot soon. I mean, that's the indications coming through from the Fed. And Bank of Japan, Bank of Japan has really no right to keep monetary policy where the economy is not in any shape or form to have that ultra-loose monetary policy and quantitative easing, which we've been calling a major policy error. And, they've needlessly kind of destroyed the purchasing power of Japan. For the sake of profitability of some multinational and exporters. So, we think the yen is very undervalued. I think, and the fact that we're seeing such a huge inflow of tourism from all over the world is actually telling you that.
So what's fair value for the yen?
Who knows? But I mean, the PPP, the purchasing...
You're calling the yen undervalued. You would know fair value for the yen.
Purchasing parity is saying 120, but as I said, who knows?
I don't discount anything that you're saying, right? And we know why, or we can... maybe I won't say it on air, but some of the rationale behind why they've engaged in this monetary policy for as long as they haven't. You mentioned some of the firms that it does indeed benefit, and perhaps the rationale behind that. But with all that taking all of that under consideration, what they should do and what they will do, two very different things. What's your expectation on what they will do? Because we get out of, NERP, we go to ZERP, probably. This is the most likely set of circumstances. But is there any further movement after that?
Okay, so I think the inflation in Japan is being underestimated because, firstly, the base effect that just came through for the Tokyo CPI. So, it's just the base effect which has risen the rates. But actually, it's the government subsidies of the household which have kept inflation artificially low. And in April, those household subsidies will expire. Whether Kishida's government will continue to kind of extend that, probably a little smaller in value terms, we'll have to wait and see. But once they do, the inflation will actually be even higher. Wages, we think, is going up. Cost-push inflation is inflation. Regardless of what you might think, this is just cost push. Yeah, but that's still inflation. What do you think it is everywhere else? Don't you think that isn't a cost push in the US or in the UK, for example? So, I think that Bank of Japan will be fairly moderate in their way of kind of pivoting, but I think they will start underrating the inflation rate going forward, as they have done for the last 2 years.
What would this mean for the consumer in Japan?
Well, I mean, yeah, so the consumer in Japan has been hurt by the inflation rates that we've seen. They've been eating into so hopefully, you know, as wages start growing, maybe that will offset that. But the big fallacy is that over the last 20 years, it was the deflation that hurt consumption. Actually, deflation helped consumption in Japan because wages were stagnating, prices were falling, and thus consumption held up. And now, you know, wages are going up, but inflation is still rising ahead of that. So for now, you know, consumption has been hurt. So we'll have to wait and see.